Authority's June 2025 Audit and Finance Committee meeting. Today, as Anil mentioned, is Thursday, June 12th, 2025. The time is 10:06 a.m. We welcome the committee members and others to the meeting, including our external auditors Deloitte and internal audit representatives from RSM, all of whom we will be hearing from during this morning's meeting. My name is Ben Brando, Senior Director of Internal Audit and Assessment. It's a privilege to be with everyone today. And thank you to those of you unable to join in person this morning who are with us online via live stream. Anil covered some of our administrative items already this morning. Thank you, Anil. Again, just a reminder to use microphones, make sure it's enabled in green when you're speaking, and tap again in red to mute it when not speaking. Again, as noted a moment ago, this meeting is being live streamed, and as such, it's imperative that all speakers please speak audibly using the mics so everyone can hear your important contributions to the meeting. And for the record, we will now have the roll call conducted by Internal Audit and Assessment Assistant Director Anil Agrawal. Anil, kindly please proceed.
Thank you, Dan. Good morning, everyone. So we'll proceed with the roll call from the Audit and Finance Committee. The chairman of the committee, Mr. Gonzalez.
Present.
Mr. Kaplan.
Present.
Mr. Koo.
Present.
And to my left, we have Benjamin Brando, Senior Director of Audit.
Present.
To my right, we have Ayat Lee from Finance.
Present.
Anika Lescott Martinez, CFO.
Present.
Jeff Lesnoy.
Present.
Jason, and then we also have from Deloitte, Jill Strohmeyer,
Present.
Darshan Patel,
Present.
Tony Lim.
Present.
From RSM, we have Clara Ewing,
Present.
Elizabeth Watts.
Present.
From Law, we have Jason Goldberg.
Present.
From Finance, Amita Patel.
Present. Present.
Okay, thank you. So, from our internal audit team, Avik Das.
Present.
Okay, Mr. Chairman, we have all the presenters present, as well as we have quorum in terms of the Audit and Finance Committee members, so we can proceed with today's agenda.
Thank you very much, Anil. Mr. Chairman and committee members, we have a comprehensive meeting agenda this morning, so kindly please be mindful that we do have a good deal of material to cover in today's session. The first item on this agenda is the approval of the minutes of our Audit and Finance Committee meeting held last month, May 6, 2025. Do we have a motion to approve those minutes?
So moved.
Do we have a second?
Second.
Okay, that's carried. Thank you very much. That get us through our first
They need to
agenda
vote.
item. And now a vote, sorry. Vote, all in favor?
Aye.
Was that all three ayes?
Yes.
Thank you. Now carried, and thank you for that. Moving on to our second agenda item. So for our next two agenda items combined, I invite Vice President and Controller Jeff Lesnoy to present highlights of the financial statements as of December 31st, 2024, for the annual comprehensive financial report for 2024, for both the New York City Housing Authority Consolidated and for NYCHA Public Housing Preservation 1 LLC. Jeff, good morning, please go ahead.
Good morning, committee members. It's been a while.
Yes.
As typical, we'd like to present the significant GASB adoptions for the year. So we're going to cover one GASB 101, and that's named compensated absences. Now, in the past, we reflected this as accrued leave on our financial statements. We changed the name to conform with the GASB, but it has the same meaning. So we're going to go into some of the details here so you get a better understanding of this. GASB 101 requires that liabilities
Excuse me a minute. Are you referring to some document we've been given?
I'm referring to these slides here.
Oh, I can't read those.
I think you have a packet there too.
Yes, there.
Yes, there has been a handout supplement there, highlights of the financial statements as a percent. Thank you. Thank you all.
First page.
I got it.
So GASB 101 requires that liability is be recognized for leave that has not been used, and leave that has been used and not yet paid in cash or settled through non-cash means. Liability should be recognized for leave that has not been used if the leave is attributable to services already rendered, and the leave is more likely than not to be used for time off or otherwise paid in cash or settled through non-cash means. This is different from the previous standard, which used a probable standard, generally 90-95% probability to record it. If it's less than 90, don't record it. Now it's more likely than not, so pretty much 51% and above you record it. So you're recording more liabilities than we used to, in theory. This also includes bonus leave, which is accumulated and paid when an employee retires if certain criteria are met. The statement establishes guidance for measuring liability for leave that has been used, that has not been used, generally using an employee's pay rate designated financial statements. So we first calculate the number of days an employee has earned that they're entitled to, and then we go to the chart of what their salary is at year end, we calculate the hourly rate, and then we have an accrued liability for that. Certain salary-related payments that are directly associated with payments for leave, such as FICA, should be included in the measurement of liabilities. We include not just the base salary, but also FICA and other direct costs. GASB 101, like all GASBs, requires a restatement of prior year financials, as well as a restatement of balances as of January 1, 2023. So when you look back at the financial statements last year for accrued leave, and you look at what's showing up in the 2003 column, this year there'll be some differences there. That's the restatement. Cumulative effect of the restatement on January 1, 2023 was an increase in compensated absence liability of $6 million and a decrease in net position of $6 million. The impact on restated liability as of December 31st, 2023 was an increase of $7 million to a restated value of $202 million. As of December 31st, 2024, the compensated absence liability is $235 million. So it grew by around $32 or $33 million. And while there are a variety of variables that cause that change, one of the changes is that salaries are higher in 2024. So the actual compensated absence liability is going to accrue at a higher rate. Any questions on GASB 101?
How is the term leave defined? Does that include military leave? Does that include maternity leave?
It includes virtually all types of leave. Military leave and maternity leave have been considered in the process. They haven't really amounted to much, if any, dollars in there. But we do consider it. I mean, I think the major factors are the PTO leave, which at NYCHA is no longer a sick and vacation day bank. There's a PTO bank that captures all of that.
Well, let me understand something. I understand if somebody retires and they have not used their vacation time and they have not used their annual leave time, that they get compensated in cash at that point when they retire, maybe. But isn't this leave dollars built into the salary? I mean, if you're entitled to 20 days of vacation, if you're an employee, and you're entitled to 12 days of sick leave if you're an employee, isn't that built into your salary? You're not counting that as additional compensation, are we?
Well, we technically have to assume that people will get paid or settled in another manner. We can't assume that they're gonna just stay with the company and use the vacation days.
Yeah, but vacation days, don't people just take that as part of their salary? There's not additional dollars assigned to that.
So I think, Mr. Hu, this is a really great question.
I'm just trying to understand.
Sure. And happy to give a little context. So in generally speaking, and I won't sort of say the number of days, but if you retire or otherwise separate, we owe you for those days that you have accrued but have not used.
Right.
And it is not uncommon for people to retire or separate from service and have a considerable leave bank. And so what GASB is sort of requiring is that we count the value of that and show it as a liability, because while it's not paid today, it will be paid in the future, and that's what we have to account for. So to Jeff's point here, things like military and maternity leave are actually less common in NYCHA than you would think. And the days that are really being used here are the leave that folks accrue as time goes on, or if they accrue comp time, so you've chosen to take an hour of leave to be used in the future in lieu of overtime dollars, for example. So those are the leaves that I think make up the most of this 235 million liability. And so they're not paid that year because you can elect to not take your leave that year. And there are considerable balances across employees at NYCHA, particularly those that have been here for many years.
But isn't there a time limit in terms of when you have to use your vacation time and
No.
your sick leave time?
No, we don't have a
Oh,
use it
there's
or.
no time limit?
No, there's no time limit. There's a limit to how much you might be paid out when you separate or terminate,
Yeah, that's,
but there's no time limit. So you could accrue, and I've seen it, 200 days of leave. You may not get paid for all of that leave when you terminate or separate, but you have accrued that.
oh, and somebody's monitoring whether these days are taken or not taken?
Yes, it's in our standard timekeeping software.
Oh,
So Jeff and his team know how much leave each employee has. They can make calculations, as they mentioned, based on their salary to get to the hourly wage rate, et cetera, and see it all the way through.
Employees
I was just
see,
concerned about overstatement, whether or not this.
employees see this information on their,
Of double counting here.
employees see this information on their pay stubs also.
So for the leave that's taken in that year, that would show up as part of the salaries. But for the leave that isn't taken, Jeff and team have to accrue it as a liability in the future.
Okay, thank you.
I'm sorry.
Excuse me, this brings up another question. So, are they asked or at least motivated to take the time off so that they will get compensated for what they're supposed to get?
Well, I can't speak to the union and HR rules, but we are required to state the liability, and we are required, to keep track of the leave that employees have. As to the rules around taking the leave, that's really out of my expertise.
So is that done prior or is it done at the time when they're leaving? In other words, you keep track of whatever time they've got, okay? And that's all well and good. Does the employee know that he or she is not gonna get the full amount when they retire, and
Yes.
they know that, and they actually give this away?
Well, the rules are in our HR manual and handbook,
There
which
is.
is published online and available to all employees. So employees have access to this. It's very clear. I don't remember the number, so I don't wanna misspeak in this meeting. But there's a limit to how much leave you will be paid out for upon termination or separation, and so people are aware of that policy. It's in writing, and employees can make decisions accordingly.
So they have to read the fine print.
Well, I think we do a good job of publicizing it, so I hope it's
Okay.
not too fine a print.
Thank you.
Okay, thank you with that. So move on to our next favorite topic, rent collections. The baseline for rent collections was pre-COVID, 2019. We collected $1,058,000,000. If you go to 2022, that rent collection dipped substantially to $870 million. 2023, we saw a little spike up, largely due to ERAP collections, $1,028,000,000. But if we look at it without ERAP collections, $904 million. So we did see some increase from the low in 2022. And in 2024, we're at 969 million with ERAP collections, but without ERAP collections, about 910 million. So both 23 and 24 are higher than the low, but lower than the baseline of 2019. Now, the promising news is that we are increasing, and over time, we've had more than a 10% reduction in our apartment units that went to PACT. So apples to apples, these comparisons are not really as fair as they could be. You know, $1.058 might have included close to $100 million relating to PACT transactions that are off the books in 2024. So we are improving the rent collections, we still have a way to go. Despite ERAP collections, rent arrears at the end of 2024, $456 million. And that compares to at the end of 2019, where rent arrears was $111 million. So we still have a lot of rent to collect. Now, there is a program, a Home American Rescue Plan, referred to as HOMAR, which is very promising. We've already collected about $82 to $85 million in 2025, and we expect to collect more before year end. Now, when I look at the tenant revenues on the statement of revenues, we'll look at that later, we'll see that this doesn't mirror cash because we're on the accrual basis of accounting. So revenue is accrued when it's probable we're going to collect it. And at the end of the year of 2024, we made the assumption, the estimate that $82 million for the HOMAR program would be collected, and we have that in the bank already. It came in April. So we might exceed the expectations, we expect to exceed the expectations, but we still have some work to do on that. Questions on rent collection? Another one of our favorite recurring topics, pollution remediation obligation, particularly lead-based paint. As you know, we have a testing process called XRF testing, which tests the apartment units for positive lead. And if I take this back a couple of years, we had completed the testing at the old standards, and we started to abate those properties. And then the city implemented new rules and reduced the amount of lead that was allowed in an apartment from 1.0 milligrams to 0.5 milligrams. So we had to start the testing all over again. So it's a slow process, it's a steady process, but we're not complete with the process. Last year, when we closed the testing process, 43% of the apartments tested positive for lead. At the end of this year, we're up to 46%. So that's 3% additional apartment units, meaning that the cost of the overall abatement and remediation is going to increase. And that's part of the reason for our increase of the pollution remediation obligation.
Too bad we
Now-
can't bill them for the difference.
That would be nice. Now, we're still only at 50%, 57% of the apartments tested as of the time we cut this off in March. So this 46% positive rate will change. Will it go up? Will it go down? Will it stay the same? It's unknown at this point in time. But there'll probably be some change before the end of next year on this. And testing will probably go on for another year to two before we're completed and before we can lock down the population of what needs to be abated. In addition, there was an increase in tenant relocation costs and contractor abatement costs. So collectively, all these contributed to an $846 million special item cost on the financial statements, resulting in an increase in the pollution remediation obligation from $4.3 billion in 2023 to $5.0 billion in 2024. Questions on pollution remediation? Okay, we will get into the financial statements, a summary of the financial statements. And while it's normal to show the statement of net position first, the set of financial statements and the statement of revenues second, I like to do this comparison the statement of revenues first, because I think it provides a little more value in the understanding of what's going on. So if we look at the operating revenues, the operating revenues increased by 109 million to $1,085 million. This is due mainly to an $82 million reduction in the allowance for uncollectible accounts as relates to expected rent collection estimate for the homeowner program, as we discussed earlier. Actual collections slightly exceeded that value received in April 2025. In addition, in 2024, NYCHA received most of $35 million of funds through the COVID rental assistance program, known as CRA. And both of these things were added to operating revenues and basically explain why the revenues were $109 million higher in 2024. Operating expenses increased by $356 million to $5,544 million. Included within this is, the largest piece of this is the $289 million increase in rent for leased dwellings, which is our Section 8 program, resulting from higher housing assistance program payments per voucher unit and an increase in the number of voucher units. But this expense increase was roughly offset by an increase in HUD subsidy, which we'll see in non-operating revenues later. General administrative expenses increased by $103 million, primarily due to higher employee benefit costs, pension, health insurance, etc., higher workers' comp costs, as well as an increase in compensated absent costs related to the implementation of GASB 101. Utility costs rose by $31 million, partially offset by $58 million decrease in maintenance and operation expense. Non-operating revenues grew $647 million to $4,258 million, largely due to increase in subsidies and grants, including a $321 million increase in Section 8 housing system payments, which we talked about earlier, and was used to offset the expense increase paid to landlords. $215 million increase in public housing subsidy, of which I'll point out $184 million of that is from the first time Section 9 appeal subsidy. Nika, do you want to talk to that for a minute?
Sure. So there is a process by which a PHA, a public housing authority such as NYCHA, can appeal to HUD for additional operating subsidy. And from a very basic perspective, the argument that you have to make is that for some reason, the operating subsidy formula is insufficient to take into account your actual costs. We were successfully able to convince HUD, based on using our data of actual expenses at the individual public housing properties, that due to the HUD agreement, we have seen an increase in costs that are not accurately reflected in our operating subsidy. So just from a basic perspective, HUD is requiring us through the SDNY and HUD agreement that we executed back in 2019 to do more work across the pillar areas, and yet that additional expense is not being included in the subsidy to fund our properties. It is a very long and detailed and arduous process, but we were able to get over $184 million last year. And we also submitted an appeal for 2025 that we are very hopeful will also result in additional funds for the public housing program. And that was the first ever successful public housing authority appeal of that kind.
Good luck.
Very good.
Question, maybe I missed it, but I'm looking at the chart, the same chart, and I see net position beginning of year. In 2023 shows a 6,331 in whatever numbers they are, and then in 24 it says 0. Okay, so do me a favor and tell me why that's 0 and what is the significance of that 0?
Can you point it out, please?
the cumulative effect.
Is that the second to last line item on
Oh,
in the
okay,
2024 column?
We need to restate, when it comes to GASB implementation, we need to restate not just the prior year's balances, but also the opening balance from December 2022. So this is an adjustment to 1 year that's showing up on the financial statements. And it's any changes to 2023 are built into all the line items you see for accrued compensation in that position.
So GASB 101 had a negative impact?
Well, it increased compensated absent costs by $6 million. So it increased the liability, and it also increased the expense technically for the prior year, but since we're not showing expenses for the prior year, 2022, it shows up as a reduction to net position.
So, let's say moving forward, next year, that number's gonna change, I'm hoping.
Well, next year the number will be 0.
Up.
For the cumulative change.
It'll still
Cumulative
be
change-
0?
It'll be 0 for 2024 and 2025. And if we have another GASB adoption, then we may see more of these cumulative effect changes in that position.
Okay.
Essentially, Victor, this is negative 6 million relates to leave balances 22 and prior. So you wanted to, you can't record those changes in the 23 column because that would distort your 23 activities.
Right.
So you need to record that change in years 22 and prior as a cumulative effect to beginning net position. You can think about this as changes to leave balances that existed as of December 31, 2022 and prior.
Okay.
If I can raise a question on the inventories. It says material and supplies are expensed when shipped. That means that when the supplies get into a warehouse, they're not charged? And they're not expensed?
Just want to make sure that that's into the, like, so everybody online can hear as well. I'm sorry, could you just repeat that, Mr. Gatto? Sorry.
The point I'm making is that it says materials and supplies are expensed when shipped. So up until that time, they're not on the balance sheet at all?
No, it's going to be part of the inventory on the balance sheet. You look at the statement of net position, there's an inventory line there.
No, I understand, but you have a statement that says they're expensed when shipped. So they're not expensed until shipped?
Yes, some of them is stating in the inventory control, right, in the warehouse.
You buy a piece of equipment, paper, and you spend $10,000 to buy it. Until you ship it, it isn't expensed?
But when you ship in, that is going to deliver to the development or the user.
I understand that, but until then, this says it isn't expensed.
That's correct. It's going to reside on the balance sheet until it's used, at which time it will be expensed.
Oh, I see, so it's on the balance sheet.
Correct.
Okay.
Okay. So moving on to the special item, it is $46 million on the statement of revenues and expenses.
Excuse me, Mr. Lismore, before you get to that, I was just curious. This total operating revenues now and operating expenses. The operating expenses is $5.5 billion, right?
Yes.
The operating expenses is 5.5 billion. Right?
Correct.
And the revenues are 4.3 billion. So how does that compare to, if you know, and you may not know, but how does it compare to, say, pre-COVID NYCHA statements of revenue and expense? Because I remember several years ago, it was like 3 billion. approximately, 5 years ago. It's now 5.5 billion in terms of revenue, expenses. It's gone up by 2.5 billion. Is that
Expenses
accurate?
have increased substantially over the years, inflationary expenses, there's been increased staff. A lot of that has to do with
So,
staff added to comply with the HUD agreement.
okay, so my question is, I guess it doesn't have to be answered right now, but year to date, say for the last 5 years, how do you look at the revenues and expenses compared from, say, 2019 to today, 2024, 2024, the last 5 years, how does that, I just would like to understand the growth in overall revenues and the growth in overall expenses during this past 5-year period. It doesn't have to be shown now, but in our future meeting, could we please have a,
When we issue our final ACFR in the next several weeks, there'll be statistical schedules at the back which show 10 years of operating activity. And you can see what the trend is over time. You can see operating revenues have gone down over time because of the rent collection issue. Expenses have gone up. But the non-operating revenues, including subsidy grants, has also increased substantially.
okay.
So the trends are there. We can share them with you. I mean, we normally distribute the whole book to you,
Okay,
in end of June, early July. We can talk about it at the next meeting if you'd like.
okay. September.
September.
Okay, what's the report called?
Well, the ACFR, the financial statement package.
Fine, okay.
So it's usually a blue or green book that goes out to you.
The famous green book. Thank you.
I'd like to ask a question about the word fiscal and non-fiscal deposits. It's on page 32. I don't understand the difference between one and the other. Page 32, deposits. There's fiscal deposits and non-fiscal deposits. What's the difference? Yeah. Just those few words.
I'm not finding it on the page.
Oh, it's right at
Page
the top.
32, the first line.
Fiscal and non-fiscal deposits.
I cannot answer
Yeah,
that, but we'll get back to you.
It's probably the bonds.
I just didn't understand it.
It's probably the bonds, but we can confirm with Andy.
It's not the bonds.
No?
It's an investment.
I didn't know the difference. Okay, let me leave you with that. Let me try another one. If you turn to the investment paragraph on page 33, this is the most modest description of the levels that I'm accustomed to seeing. Usually there's some language that talks about what goes into each level of these things. And then there are comparable and observable truths. So it's a shorter form of disclosure that I'm accustomed to seeing, certainly in the public company business, which I spend my time at.
Mr. Kaplan, can you be more specific? Because we have a statement on investments, which is the top summary, but then we go into detail on the unrestricted investments, the
This
restricted.
talks about the fact, it's on page 33, that the authority invests only in securities for the GASB level 2. And usually I'm accustomed to seeing an explanation of the levels,
I see.
particularly when there's this much money involved.
So I understand your question, Mr. Kaplan. I was reviewing this last night and was having similar thoughts, and I married this back up to the GASB literature, and we're comfortable that this hits on all of the requirements that GASB would ask for in a footnote. But you are right that you will likely see charts. A lot of times you'll see charts with level 1, level 2, level 3, and it reconciled back to the.
And an explanation of what each level is.
They only have one level here, and so that's why this is so much shorter, which when you look at what's required and what they have in written form here, it does meet all of the requirements of the GASB, and they only have level 2 investment.
Okay. Now, if you will please look at, I'm not gonna bother you at the time, on page 35, we talk about minimizing interest rate risk. So the cash flows will not fluctuate with changes in interest rates. But the value of the portfolio will fluctuate.
Correct.
So the way this reads, you're only dealing with the cash flows, but you're not dealing with the fact that if you market to market, they will be diminished.
That is also correct.
So what I'm hearing is that if the interest rates go up and if you value your portfolio, it goes down, but you have no impact on that because you are holding everything to maturity.
Correct.
Seems to me that it affects the value of what you have. And you're not saying that. You're just saying that the cash flows will not fluctuate. But if interest rates go up, you've lost value. In the bonds. And I understand what you're saying, it just bothers me that you can have a portfolio and its value goes way down when interest rates go the other way. And you're not reflecting that anyplace. Because you're saying you're holding it to maturity.
Well, we do, at the top of page 33, talk to fair value measurement and requirements.
I guess I'm just not accustomed to seeing this statement.
Is there a particular recommendation, Mr. Kaplan, that you have in terms of how you might want us to adjust the language?
No, I only look at the fact that the values go down and I haven't gotten into looking at language that I've used.
So let us take that comment back and we'll just take
Yeah,
another look at how we
just
might adjust.
You know, it's like if I had a trader who said, don't worry, Mark, I'm going to hold the stock, this asset to maturity, but your balance sheet isn't affected, he or she wouldn't last very long. So, okay.
Thank you, Mr. Kaplan. Jeff, please continue. And if it's possible, just in the interest of time, if we could let Jeff complete his presentation first, and then we'll take any remaining questions, just so we can make sure we get through the remainder of the agenda, that would be much appreciated. Thank you.
I have one or two other questions, not about the accounting, but the numbers.
Sure.
When you look at the oil spills, year on year, page 44. It didn't change from year to year. That's unusual, isn't it?
It changes slightly every year, sometimes it might not change at all. I don't think it's unreasonable, it's just what it is.
Okay.
Okay. Back to the statement of revenues and expenses. Capital contributions is increased by 318 million to $1,411,000,000. Largest capital contributions were from the Federal Public Housing Capital Fund, 565 million, up by 54 million from prior year. And the City and State of New York, 691 million, up by 300 million. So that completes the review of the statement of revenues and expenses. If there aren't any other questions, we'll move on to the statement of net position. Total cash and investments, and this comprises of about 3 or 4 different lines on the statement of net position. It's $1,008,000,000 versus $1,187,000,000 last year, $179 million decrease due to continuing shortfalls in rental collections versus bill, inflationary expenses, and timing differences in reimbursements from the city and other grantors. Accounts receivable net increased by 333 million, 236 million from the city, so that's money that's coming in, hopefully in 2025. $83 million increase in tenant receivables, and a $32 million increase from FEMA. The increase in tenant receivables is primarily a result of $82 million of funds expected to be received in 2025 under the Home American Rescue Plan, HOMAR. And this money has been received already through April 2025. Capital assets are $11.4 billion, which includes a $168 million accrual adjustment above the amounts reflected in this package received, representing a $963 million above 2023 due to continued increase in building improvements. Just talking about capital assets, as part of the audit, there were a number of irregularities identified by Deloitte. Some of them related to the accrual process, which as a result, we accrued $168 million additional accrual beyond what's included in these financial statements. We booked that, but it doesn't appear in this yet because obviously there's a timing difference. So in the final financial statements, we'll have $168 million more. There are a couple of other loose ends, which we're attending with Deloitte also relating to audit findings, and that may or may not result in increase or changes to capital assets. Current liabilities for 2024 are $1.7 billion, which includes a $168 million accrual adjustment as I referred to before. Pollution remediation liability, non-current, increased by $633 million to $4,884,000,000 due to an increase in lead positivity from 43% to 46%, due to an increase in tenant relocation costs and contract maintenance costs. Long-term debt was reduced by $78 million to $522 million, largely due to a $20 million prepayment of the HDC 2009 Series L1 on behalf of LLC1, and $46 million normal debt service on HDC Capital Fund Revenue Bond Series, 2022A series. So are there any questions on the balance sheet, the statement of net position before we move on?
One little one. There is a statement on page 49 that $720 $5 million will loan to them. Who's the them?
Which paragraph is it on?
Second paragraph. That the authority. Just couldn't figure it out.
Probably to NYCHA, but we will verify that.
Maybe it's it. I don't know.
Okay, we're gonna move on to NYCHA Public Housing Preservation. Number 1, LLC1. So I'd like to give a little background because normally it's a very simple entity, but this year there were a number of complexities that occurred during the year. In order to facilitate LLC1 first and second PACT transaction, LLC1's parent company, NYCHA Housing Development Fund Corporation, purchased the remaining 99.9% invested interest in LLC1 from Wells Fargo. I think it's on September 23, 2024. So we bought out Wells Fargo, they're out of the picture now. As part of this transaction, NYCHA prepaid LLC1's mortgage payable, 2009 Series L1. They prepaid it to HDC, New York City Housing Development Corporation, along with other transaction costs. In order to cover the funds it paid on behalf of LLC1, NYCHA issued a new $20 million note D to LLC1. So what we're gonna see when we look at the financial statements for LLC1 are the mortgage payable that existed payable to HDC, it's no longer there at the end of 2024. And you won't see clearly in the actual statement of net position, we will see it in the notes, whereas there's a new note D to NYCHA for about $20 million. Second point I want to discuss is as part of NYCHA's overall strategy to finance necessary building repairs and operational improvements, NYCHA terminated the ground leases with LLC1 and reacquired Frederick Samuel and Manhattanville developments in order to execute these PACT transactions. Directly related to this, outstanding NYCHA loans were canceled for these two developments. All related debt was forgiven. This resulted in a couple of unusual transactions in the financial statements. $152 million gain on forgiveness of debt and a $38 million loss on the transfer of assets. And this appears on LLC1's financial statements. But the important point is that these gains and losses are washed when they're consolidated into NYCHA. So they come out to zero on NYCHA's financial statements. Any questions on the transactions that occurred during the year? Okay, so we'll get into the meat of the financial statements. Tenant revenue increased by 12 million. And we're gonna find that we have a lot of the same factors here as we did in NYCHA. Because the tenant revenues increased largely due to the reduction in the allowance for uncollectible accounts as relates to expected rent collections estimate through the Homework program. These funds were received in 2025. Total operating expense down by 22 million, 219 million, largely due to PACT transactions, where partial year expenses were shifted to PACT partners, and due to significant retroactive salary increase in the collective bargaining agreement for 2023. Subsidies increased by 39 million, largely a result of 23 million from Section 9 federal operating subsidy, and 14 million due to increase in Section 8 housing choice voucher program. Special item in 2024 was 27 million versus 80 million in 2023. And had we not had the PACT transactions, this 27 million would have been much higher. But because we had the PACT transactions, the liabilities for the Manhattanville, the Frederick Samuel developments are removed from the balance sheets of the LLC1, and the developer picks up the risk and the liability for settling these things. So the 27 million is lower than it would have been ordinarily.
Are there any of these sorts of transactions at risk with whatever our current president is looking at?
Can you be more specific?
I don't. All I know is that the number of things that I see in various places which involve what people can look at as financial legitimacy have been attacked by the now government in Washington. And I'm just asking whether or not we're in any way, when we do these sorts of things, having to make sure that there's no attack coming from the current administration.
Well, I'll answer the first part of the question, that from the perspective of the 2024 financial statements,
No, so
there's no impact. There's certainly uncertainty in the environment, and I'm gonna defer that to Anika when she returns to respond to those questions.
does she pray?
But Mark, to your comment in the last meeting, NYCHA did include disclosure in the transmittal letter related to some of what's going on, these macro and micro, economic conditions in the transmittal letter, so the reader can read through that.
I saw that.
My fear is only the Section 8 issue. And, what he's attacking at the moment and how that's gonna affect our financial statement moving forward. And if he doesn't give those monies to these loans and stuff that we do, then there's gonna be a big impact on the people that are currently in Section 8.
Obviously, there's great concern over that, and it's more of an operating issue than a financial statement issue. The financial statement is just picking it up after the fact. But when Anika returns, she can address some of those questions.
But in addition, there's also the collateral issue with HTC bonds. As I understand it, the Section 8 subsidy is the collateral for the HTC loans. In other words, the bonds that were issued by HTC are underwritten by Section 8, as I understand it. Now, maybe I'm wrong, but that seems to me to be a major issue that needs to be looked at. What happens if that collateral is removed? And who then, or which entity, city, state, whatever, is gonna guarantee those bonds? That's a question. That's more specific.
Certainties,
Lots of people I see.
specifically, Richard is now talking about the collateral to HTC bonds.
34.
I think Mark is talking more about generalities, that subsidies be small or non-existent.
Okay, I can speak to the general. Sorry, I actually stepped out to go get our treasurer, who's going to come in and answer some of your questions on the note. So I understand that there were some questions that the committee had regarding the federal uncertainty and just the general tenor given the administration in Washington. So I will say that, NYCHA is closely monitoring the various funding bills and discussions happening on the Hill. As many of you might be aware, President Trump released his full budget a couple of weeks ago, and that budget it's a proposal, but it did request, major changes and overhaul to the public housing and Section 8 programs. The biggest of which is that it cuts the programs by about 43% or $27 billion across. It eliminates some of the smaller programs like that provide some key resident services like the Family Self-Sufficiency Program, the Ross Program, and others. And with regard to public housing, Section 8, and also our capital funds, it groups everything into one block grant that would then be administered by each state. The language has no detail regarding how that formula would even come about. So after you've grouped all this money together for these programs, which on their own are major, and you've cut it by 43%, what is the formula by which New York gets money versus Florida versus California versus Minnesota? And so all of that is unclear, and it just says, the secretary will determine the formula, and that formula can be changed annually and so forth. So I would say that in terms of, I think there's a low probability that something like that would go forward this year. However, we take all of these proposals very seriously, and we do the contingency planning internally, as well as advocating with residents, with our various stakeholders to make sure that the public housing and Section 8 programs get the funding that they deserve. So I would say that we continue to monitor the situation on the Hill. That is only the president's proposal. Congress still has to, come up with their appropriations bills. We expect that there could be a reduction in public housing and Section 8 funding. I think that is reasonable to assume at some level, given the, general tenor of the conversations in Washington. But we'll continue to fight for the funding that we need for our programs, and we'll plan accordingly.
And you'll end up doing what a lot of companies doing, that has some paragraph someplace in the financial statements that says in a nice way what you just said.
Yes. I believe it is in the transmittal letter already. We drafted something that talks about federal uncertainty and the bills and everything that we've said here. And we'll of course keep, everyone abreast of what happens. The good news is, well, maybe good news, but a proposal such as that requires major overhaul and significant authorizing language. So it's great that they proposed it, but now the authorizing committees have to actually take that up and write out a bill that would, come up with the parameters of that program in far more detail, and that is going to take a lot of time. So I think, we of course are, again, taking it very seriously, advocating for our residents and for our agency, but I think we are optimistic that such a proposal may not go forward this year, but that we should be prepared for other cuts as they may come.
Yeah, that you need something like that in it. Yeah.
I admire your optimism.
We don't have a choice, people are counting on us. Mr. Coon.
While you were out of the room, I had raised the question about the HDC loans, the bonds.
Yes, sir.
The bonds that were issued, the long-term bonds, et cetera. Many of them are, as I understand it, collateralized and underwritten by Section 8 funding. That's my understanding. Now, it may not be correct, but I would suggest that NYCHA, come up with a backup plan to have those bonds collateralized in the event that there's a cutback in Section 8.
Not the bonds, that's right. So Mr. Koo, thank you for that. We'll certainly, talk internally. I can confirm that all of our deposits are collateralized, but you're right, I do not believe the bonds are collateralized. And so we can, in the spirit of contingency planning, just really think through, how to be cautious and sort of protect our various interests.
So the bonds are backed by the full faith and credit of the City of New York?
How good is
I will defer answering that question because I do not know the answer.
Any more questions?
If you would like, we do have our treasurer, Andrew Dokis, who has joined, if you wanna mark him present for a roll call. And Andy is happy to speak a little bit to note 2, Mr. Kaplan, where you had some questions, if now is an appropriate time.
Thank you. May we include him in the roll call?
Great. So Mr. Kaplan, if you have specific questions, I gave Andy a little bit of a preview of your questions regarding note 2. He's happy to speak to just in a very general sense, because we did grab him from another meeting, a general sense of the questions around the various levels and groupings in the GASB, it's right in the front. As well as, some of the bonds and so forth.
See that for a while.
Andy?
So my understanding was you had a question with regard to level 1, 2, and 3 inputs?
The question I had is that, I got it on. The question I had is that you have a very brief mention of the levels. And I understand that you're told that you only have one level of the, but I'm accustomed to seeing a longer description of the levels in a lot of the work I do.
Sure, and I've definitely seen that more extensive descriptions, particularly in the private sector. I know that I don't believe we changed the descriptions this year, but if you think they should be expanded, I think that's something we'd be happy to work with the auditors next year in developing more explicit disclosure.
Okay. Thank you.
Okay, so thank you, Mr. Andrew Dokos, our treasurer, for your contribution, and your presence is recognized. Thank you.
And Mr. Kaplan, do you have any questions regarding the bonds that you wanted to go over?
The bonds.
Yes, when we were talking about the mark-to-market, Andy's happy to give you a bit more information on our general strategy
The question
and the
I had
changes.
is that you have some language here that says you don't mark to market because you expect to hold the bonds to maturity, so you don't have any. And at any given moment, the bonds will be worth considerably less than the carrying value. And you're saying you're justified in not marking it down because you hold it to maturity.
Yes, Mr. Kaplan, where does it say that we don't mark to market?
I was told that the reason you don't do anything is that you hold them to maturity.
Well, we do mark to market, and we show values that move up and down. We had big valuation changes after COVID when interest rates plummeted.
I have to go look and see where I found that. Sorry.
But I think the point is, we don't necessarily bear the financial risk of that, because we do hold it to maturity. We still record it as required by the GASBs.
I understand that, but if for some reason you need to realize that asset before it's mature, you'd have a loss.
Well, that's correct. And the loss is reflected on the financial statements at that point in
At
time.
that point in time, in fact, that you're not,
Okay, do you want
I'm not accustomed to having a blanket statement.
Well, I think this statement, and it's a good question. I think as Jeff points out, there is disclosure as to the actual mark-to-market, the overall mark in the financial statements. What we say and what we do, following the HUD guidance, is they frown upon liquidating securities before maturity. So we generally attempt to hold everything to maturity, but as you point out, there could be unique situations where we would need to liquidate. Now, we don't anticipate any of those, and we conservatively manage it so that we would not be in that position. Just to give you a bit of background, I've only been here for about a year, a little over a year. And when I started, I worked with Anika and Jeff, and we undertook a very thorough review of all of the investments that we have. And a few of the things that we've noted and changed is we had a lot of escrow deposits that were in a low yield accounts at a certain institution. We went out and bid that out, and we increased the rate by about 3.5 points currently on in excess of $100 million of assets that we hold. When we look at the cash position, that's how we determine whether we're going to reinvest as these securities mature. And so we've guarded that very carefully. But as we get some additional funds in, we will look at potentially replacing some of those securities, but not going as long as it has been in the past, probably a maximum of 3 years, which is the basic HUD guideline. So that's in effect the strategy that we're pursuing.
A strategy, I understand.
Right.
And just one from Audit.
Yeah, I would also like to make reference to page 14. In fact, actually, there's a GASB 31 that require us to reflect the market value, right? That's why we make the adjustment. You can see that page 14. Is your
14?
Yes, so there's a line called change in fair value of investment
I see it.
under non-operating revenue section. Right, in 2022, actually we had a loss of 42, but it's a paper loss, and it's we hold it to the maturity date. But in 2023, there's a gain of 18, and 2024 there's an $11 million gain. Right, so from 2023 to 24, because the interest rate didn't change too much, but we also had some investment is mature, right, related data. But you can see, we only coming from the 0 interest rate to, I think, the CD probably 4 or 4.5 or 5. But you can see that in 2022, there's a big losses. But after that, I think the interest rate is pretty stable. That's why we don't experience the losses. Maybe Andy can champion. Yeah.
Yeah, as
Yeah.
Mr. Kaplan, as I'm sure you understand, as we hold this portfolio to maturity, and as rates go up or down, that influences it. So it's really been driven by the rate environment as well as the maturities. As we go forward and bonds mature and we're able to reinvest them, obviously it will be at a higher rate environment.
You may not know this, but I used to run an investment bank.
I did not know that, but
And I'm well aware of
Yes.
this. And it was the premier bank at doing junk bonds, by the way.
I could probably guess that name.
I'm very familiar with fluctuations.
Sure.
Well, any rates.
Mr. Kaplan, does that give you more comfort on the note?
Yes,
Thank you.
thank you.
Thank you, sir.
Okay, so we are going to return to the statement of revenues expenses for LLC1. I think I covered the top sections here. What I'd like to talk about and point out and reinforce is the loss on the transfer of assets to NYCHA and the gain on forgiveness of debt. So we kind of talked about that earlier. Relating to the PACT transactions where 99-year leases were transferred over from LLC1 to NYCHA. The assets were transferred over. And as a result, all the financial transactions between LLC1 and NYCHA were basically canceled. We have assets moving, debt coming off the books. Now, while there's a big gain on this statement of revenues from LLC1, there's a loss on NYCHA's, and when it's consolidated, it comes out to zero. Same on the gain on transfer of loss on transfer of assets. It's the gain on transfer of assets on the NYCHA side, when it's consolidated, it comes out to zero. Go to the next page, statement of net position for LLC1,
What page is that, please?
14, I think.
14.
It's on the screen if anyone needs that.
Page 14 in the packet, it's actually the last page.
Oh, I found the page, I just was looking what he was doing before this page. That's the page I was looking for.
Okay, cash decreased by 4 million to 30 million. $36 million due to NYCHA in 2023. Flipped the 4 million due from NYCHA in 2024. So LLC1 was able to use excess cash resulting from expense reduction, rent increase, and other sources of revenue to reduce amounts owed to NYCHA. Look at the capital assets. They decreased by 29 million to 327 million in 2024. And while gross assets in most of the developments grew, $38 million in net assets were removed from Frederick Samuel Manhattanville transactions for this LLC1 balance sheet. So you have funding of new capital assets for 11 developments. You have 100% of the assets falling off in Manhattanville and Frederick Samuel because of the PACT transaction. We have an increase of 12 million in total pollution remediation liability due to increased positivity rate for lead, as in NYCHA, increased tenant relocation cost, increased contractor cost per unit. But this amount is not as high as it would have been because we also reduced the liabilities for the 2 developments that converted to PACT. Mortgage loans payable of 20 million, you'll see is zero in 2024. And that's due to the prepayment to HTC as a result of the buyout to the Wells Fargo investor interest. Notes and loans payable to NYCHA reduced by $119 million. It's a big number. It's largely due to the debt forgiveness on the 2 developments which converted to PACT, Manhattanville and Frederick Samuel. It's partially offset by interest accrued on notes, and also partially offset by the issuance of a new note D, which NYCHA issued to LLC1 to replace the HTC debt, which NYCHA prepaid. So I'll have 2 other comments, and then I will finish up. We're not going to present financial statements for LLC2. We've seen that in previous years, going back to 2022. This is an inactive entity. It's got about $10 million of cash, $9 million amounts due from NYCHA, working actively with the law department and with external law advice regarding the liquidation of LLC2 and how to reuse the HTFC2 parent company. So I think we're very close to a solution. We're going to start to execute that during the latter part of 2025, excuse me. And the last thing is, we have one of the component units of NYCHA, and that's New York City Public Housing Preservation Trust. And this will be covered in the separate trust audit committee meeting on June 25th. But it's immaterial to the NYCHA financial statements. It's got a few $1 million of assets, a few $1 million of liabilities. So with that said,
Could you repeat that again? What's the liability?
the Public Housing Preservation Trust
Right.
has a very small balance sheet. A couple $1 million of assets, a couple $1 million in liabilities. And it hasn't really begun its business. It's selected 4 developments who are opting the trust method, but nothing has been executed yet, and that won't take place until 2026 at the earliest. So they're just incurring expenses, incurring some liabilities on the shared service agreement with NYCHA. It's included in the total NYCHA audit. It's immaterial to the total NYCHA audit, but the separate standalone financial statements will be reviewed by the trust's own audit committee on June 25th. So that won't be presented here.
So things are gonna keep changing in the sheets, the accounting sheets as we move forward with that new portfolio of changing the section 9s to section 8.
Yes.
And then of course it'll depend on how quickly they do it. And is that finite? I mean, do we have a number that we're gonna stop at, or are we still?
I think the trust has certain language in their authorization through the state of New York that gives them, I believe, up to 25,000 units. Is that right?
That sounds about right.
25,000 units, so at the very least, they can do up to that amount. I don't think that we've made any firm decision or internal policy regarding going above that at this time. So developments opt in, they, do a formal vote for the trust, PACT, section 9, etc., and that's how, as Jeff mentioned, they select the transactions. They haven't closed anything, so Jeff said in 2025, it's really immaterial, it's of course included in our overall ACFR, but it's small dollars compared to NYCHA overall. When we get into 2026, such that they execute a transaction, that's, I think, when you'll probably see some more movement, similar to what happens in a real estate transaction with PACT.
Are we talking about both the PAC program and the trust, or are we just talking about the trust?
Just the trust, PACT is
Okay.
already included, and you see that showing up both in the LLC1, as Jeff was mentioning with Red Sam and Manhattanville and those impacts, and of course, in the larger NYCHA statement as well.
Okay.
Unless there are any other questions, thank you.
I have a thing where I have marked up some obvious typos, so I'll be handing it to you.
Thank you, Mr. Kaplan, we always appreciate that.
Thank you. Okay. Thank you, Jeff, Anika, and Ayat, and thank you, committee members, for your questions and comments. The time is 11:24, and our next agenda item is the presentation of a motion. Do we have a motion to recommend the approval of financial statements? So moved, and seconded?
Second.
All in favor?
Aye.
Thank you, that's carried. Okay. Now our next agenda item is the presentation of Deloitte's Audit Committee letter and Management Representation letter for the 2024 audit.
Trustees.
I invite Jill Strohmeyer and team of Deloitte to begin that presentation.
Well, thank you. Before I get started, I just wanna say thank you to a number of individuals. I'll start with the Deloitte team. We started this audit last year. We're moving into our final stages here over the next couple of weeks in preparation for issuance. It's not possible without a team of folks behind me and supporting what we do here. To my right, we have Tony Lim, who is our new manager, who has been on this engagement now for the second year, really running the day-to-day operations of our audit. And Darshan Patel as well, who is our senior manager, you all know. She's important to what we do on the compliance side here at NYCHA. And then there are a number of individuals either watching today or behind the scenes who I would also like to thank. So thank you all for your efforts this year. And then of course the NYCHA team, Anika, Jeff, Aya, and your entire team, thank you for your support, dedication. Having the audit support provided timely allows us to get this done and across the finish line, so thank you as well. Before I get into the two letters that were distributed this morning, I'm just going to touch briefly on tabs 5 and 7. These are the audit reports that we are planning to issue later this month related to the NYCHA consolidated financial statements as well as the LLC1 financial statements. These are our audit opinions. They look very similar to prior years. They are unmodified opinions or clean opinions. The one exception is under the emphasis of matter paragraph. Last year, we highlighted the fact that the authority and LLC1 adopted GASB Statement 96. That language has been updated to refer to GASB Statement 101 this year. So that's really the only change within our audit reports this year compared to last year is the reference to GASB 101 adoption. And that we point the reader to the footnote where they can find more information related to that adoption and its impact on the financial statements. So I wanted to set the stage, that clean, unmodified opinions for the audit. Now I'll take you through our results of audit letter. So just want to remind the committee that Deloitte was engaged to audit the financial statements of the New York City Housing Authority and the NYCHA Public Housing Preservation 1 LLC for the year ended December 31, 2024. We audit in accordance with two sets of standards here, the AICPA auditing standards as well as government auditing standards. We plan to issue our reports on or about June 20th, which is a week from Friday. We do still have some final audit items that we're completing now with the assistance of management, and so we're targeting next Friday for issuance of our report as final. Significant accounting policies for NYCHA and the LLC1 are outlined in footnotes to the financial statements. The only significant changes to the adoption of previously adopted accounting policies is GASB 101, uncompensated absences, which again, that has been discussed and disclosed within the financial statements. We are not aware of any other significant changes in previously adopted accounting policies or their application during 2024. Accounting estimates are an integral part of the financial statements, as you heard about today during Jeff's presentation. We have looked at those estimates and the judgments used to develop those estimates. And a couple of those estimates are also outlined at the back of our letter here today, which I'll point out here in a few moments. I'm pleased to report there were no uncorrected misstatements brought to the attention of management as a result of our audit procedures. And there were no material misstatements brought to the attention of management as a result of our audit procedures. We did have some, what we would call immaterial items that we did bring to the attention of management, which they're either being assessed or they have been corrected or will be corrected in the next version of the financial statements, or I should say corrected before the issuance of these financial statements. We had no disagreements with management during the performance of our audit. And we encountered no other significant difficulties during our audits. Within, I mentioned our emphasis of matter reports. We will have a control matter that we are still concluding on. Jeff mentioned in his presentation that management is currently recording $168 million accrual adjustment, mainly related to capital items. And so that $168 million adjustment will be reflected in the next version of the financial statements and prior to issuance. As a result of that adjustment, which was brought to the attention by the Deloitte team, there will be a control deficiency, the severity of which has not been concluded on at this time. Just a reminder to the committee, there are 3 levels of severity, material weakness being the highest, significant deficiency, and a deficiency. I'm fairly confident this will not land at material weakness, but we have yet to determine whether this could be a significant deficiency or not. We will update the committee further at the September meeting around the conclusion of that severity. On pages 7, 8, and 9 of this report, we highlight some key accounting estimates that are part of these financial statements, including pension obligation, OPEB obligation, and claims liabilities, and some of the important information used in developing those estimates. The second part of this is the management representation letter. We're required under the auditing standards to share this document with the audit committee. It's a key piece of audit evidence and something that we need to receive prior to the issuance of our auditor's report. It's fairly standard and very similar to prior year. Date changes and then updates to new GASB references have been made within this letter. But other than that, I would say there's nothing significant for me to highlight or bring to your attention regarding the management representation letter. Management is currently reviewing this as well. They may have some changes or edits, which is likely to happen. It happens every year. We will consider those and make those changes if necessary prior to them signing this document. And with that, that concludes my prepared remarks on the results of our audit, but happy to answer any questions you may have of the Deloitte team.
I have something here that wasn't signed, so this is not an official document as of yet?
Correct, it's a draft.
Okay. Something else, I thought I wrote it down. I still can't find what I spoke to you about earlier. When I do find it, I'll call you.
Let me know. Sure.
Thank you, Jill. Okay, to clarify, so the motion is now in order to recommend the approval of the audited 2024 financial statements to the board, for the approval of the financial statements and the consolidated annual comprehensive financial report for 2024 and LLC1.
So moved.
Seconded?
I'll second it.
All in favor?
Aye.
Okay, that is carried, thank you all. Okay. Moving on to our final agenda item for this morning. As the committee is aware, as we kept you apprised on this subject matter over the past months, we awarded a contract to RSM US LLP in October of 2024 for development and implementation of a plan to provide internal audit services for the agency. And we began engaging with them immediately on development of that plan. As you may recall, you met with RSM representatives previously about this, and they were responsible for developing a 3-year audit plan, which I look forward to them presenting to you this morning for this committee to recommend to the board for approval. Accordingly, it's my pleasure to turn it over to Clara Ewing and Elizabeth Watts of RSM to present our recommended 2025 to 2027 internal audit plan. Clara, this.
Hi, everyone. Glad to be here. Glad to be presenting to you all, presenting the plan. Matter of time, we're going to go over just some certain slides within the deck that you all have. But I just want to reintroduce you to RSM. We are the 5th largest professional accounting firm. Liz and I sit on the consulting side of the house. So we do 100% internal audit for government entities. I lead our internal audit efforts for our government entities. So we are your core team. One of our core team members who is not here today, her name is Jennifer Murtha, and she is actually our industry leader for government services. She's on the consulting side of the house too, but she leads from a government services lens. But she wasn't able to be here today, but I look forward to you all meeting her. We really wanted to take our time to get to know NYCHA. It's so large, there's so much going on, so we wanted to make sure that we really took our time to introduce ourselves to the departments, to the leaders, to you all, and really understand NYCHA as much as we could. I'm not saying that we fully understand NYCHA right now, right? Because it's so large, it's so big. So it was really important for us to really get that understanding, take our time with this, and really be prudent with this process. So we're gonna flip to page 1, just talking about the mission of NYCHA. Again, as you all know, increase opportunities for low and moderate income New Yorkers by providing quality housing that is sustainable, inclusive, and safe while fostering opportunities for economic mobility. And then how does internal audit come into play? So internal audit at NYCHA is to enhance and protect the organizational value, providing the board and management with independent, risk-based, value-add, objective feedback, advice, insight, and foresight in support of NYCHA's mission. So we're here today to talk about the risk assessment, the audit plan. We're gonna now go to page 3, just talking about the internal audit life cycle overall. One of the things in our methodology, we follow a variety of standards, whether it's the Institution of Internal Auditors, Yellow Book, etc. We include that as part of our methodology and how we execute audits. But the overall life cycle, you're looking at the risk assessment process, the internal audit plan, which we'll present to you as well. Audit execution, once we have that plan, now executing the audits. Remediation and follow-up to those audits. And then embedded throughout is quality control. It's a very transparent world, you all as a government entity, you all live in, so that quality control is very important. Making sure the words are right, making sure that we have the right information, just making sure the correctness of what it is that we're looking at. Our part of our methodology is we are not gotcha auditors. That's not how we function. It's about how can we add value to the entities that we're looking at. You know, Liz works with another housing authority. How can we bring insight, what we've seen in other housing authorities? I lead our government services for internal audit. What are we seeing from a government lens? What are we just seeing overall from the internal audit realm as well? Just kind of making sure that we're bringing in that foresight and that information as we are executing and as we are delivering on internal audit services. Next, we'll go to page 6. And I'm gonna turn it over to Liz, who's gonna walk you through our risk assessment process.
Good morning. So in support of our internal audit plan, the first step that we do is called a risk assessment. I'm on the wrong page, so sorry, slide 6. What we have here is our approach, so it's kind of a 4-step, but we do a lot of these things concurrently. We collect a lot of input, and so that's not just internal input from NYCHA. We do our own research. We've looked at the CAFRs or the ACFRs for the last several years, audit reports, your transformation plan. We pay attention to the media and things that are going on. We also look at, we have our own auditor experience from working with similar public housing agencies, other government services across the country. We've reviewed your budget. We look at the regulatory and other local and state statutes that you're subject to understand how the operations might work here. We've had a lot of discussions with people around NYCHA, which we're going to talk about a little bit more, including yourselves. So that's the type of input that we collect. From there, we identify what we call a risk universe. So we consider those risks holistically. We look at stakeholder responses, previous issues, inherent risks that are not just for NYCHA and other public housing authorities, but for organizations globally. A lot of risks are in every organization. And then we drafted a specific risk universe for NYCHA and thought about any new and emerging risks that might be identified along the way. So that's a dynamic document that will be ever changing. The next step is that we analyze the risks. So we took everything that we had learned and categorized and prioritized those based on likelihood and impact specific to NYCHA. And we are proposing on some specific risk areas today. It's a 3-year plan, but it's meant to be a dynamic plan. So it may change over time. We will review and reassess each year. to see if there's anything that should be changed going forward. And so all of that in development of our internal audit plan, which we will move to just the next slide. We wanted to take a little bit more time to talk about some of the input that we collected here at NYCHA. We spoke with 36 executive leadership team members. We had interviews. We talked about the different processes, policies that each of the areas within NYCHA have, how the staffing works, what processes they're responsible for, those types of things, which we have a table off to the right to summarize those. We also conducted a survey, so a web-based survey that asked a lot of questions about particular areas of NYCHA, what the risks that people saw within their own areas. We have 114 responses to that. Some other areas on here, again, the policies, the technologies, the financial statements were reviewed, and we already talked about some of the auditor experience and inherited risks. From there, we're gonna move on to slide 12. So this is the summary of our proposed 3-year internal audit plan. So you'll see the years across the top, and we've got them in a few different categories. At the top, you'll see our overall internal audit function. So these are things that every internal audit function will do continuously. Then we've got our proposed audits based on enterprise-wide audits, technology audits, and then individual audits. I'll pause there.
I would like to note, just because something is noted in the 3-year audit plan does not mean that we think that something is wrong with the process. These are just the focus areas that bubble to the top that probably need focus on first, right? We're limited, you all are limited on where we can spend our resources. So where we try to prioritize where we think we should spend that focus, but again, it does not mean that we think that something is wrong with that process. It's just, it's time for it to be looked at and for us to be able to determine how the processes are functioning.
So those are the slides we were planning on presenting today. Is there any questions before we move on to throw it back to Ben?
Great. Thank you, Clara and Liz. So a motion is in order to recommend,
Oh, wait, I didn't realize it was done. Yes, I was looking. No,
were there any questions before we move forward to a motion?
yeah. This is, it's a very, when I read it, it was more complicated than I realized. How many people are going to be involved altogether in this process?
So in this 3-year plan, I think we've identified probably 10 to 12 different departments and functions that'll be part of this plan. That's not to say that there wouldn't be additional areas that come up. So we'll be touching, I mean, a lot of people will be involved as we go through and scope and determine exactly what we'll be reviewing under each audit.
And one thing that was important when we were building the plan as well, what focus areas bubble to the top, and also making sure audit fatigue. We had a lot of discussion about making sure we did not get audit fatigue throughout the organization as well. So if you'll notice in some of maybe your prior risk assessments, a lot more topics. So the topics are more consolidated and trying to make sure too that we're not going to audit someone too much either, because that fatigue does set in.
And do you coordinate with our external auditors?
We will, we review the ACFRs, we'll have conversations, as part of their process too, they have a process as well, so yes, there will be coordination.
Who in NYCHA decides which priority areas to audit? And on what basis?
So it was based on a lot of inputs that we collected. So talking with a lot of the different executive leaders, we conducted that survey to get not just the executive leadership, but the director level input as well. And then we put together all of those responses to develop the plan based on what we heard.
So the plan was derived by us based on the process that we took and put into place and the methodology.
I know I'm not on the Audit and Finance Committee technically, but I just have a question. Can you speak a little bit to perhaps the last one on individual audit in 2026, tenant rent collection? Can you just talk that through a little bit? I'm just trying to understand, I guess, on page 19, sort of, it seems to me that there are probably other areas related to tenants that have had issues in single audits, that isn't a rent collection. Maybe I won't say it here, but there might be other things that I think would take precedent given some of what has come up in the single audit related to tenant files. So kind of like why the focus on rent collection as opposed to something that perhaps has a bit more teeth in terms of our actual compliance with HUD requirements?
Sure, and again, this is certainly a dynamic plan and may change over time based on feedback and things that have happened. Specifically around rent collection, there was a fairly significant outstanding rent balance at the end of the year, so there's a financial risk associated with that. And so what we look at around tenant rent collection are the policies and the procedures that are currently in place around that and around the payments and the follow-up, including how late and unpaid rent is monitored and followed up, items like that. I'm not sure specifically what you're referring to, but we'd be happy to have a conversation about that.
Thank you. It was on page 19.
What page is that on, the rent collection?
Page 19.
Page 90.
Page 90.
It's the last one
19,
down there.
in the individual audits section toward the bottom.
I mean, given that we don't actually like take payments in cash at the property management offices, like most of this is automated, so perhaps there's some, of course, auditing that can be done there, but it just seems like there are other areas where tenants are impacted, that is where this could probably be better used.
Nobody's gonna call me back about these. Quiet minutes.
Thank you all, we'll continue in just a moment.
Thank you.
It doesn't fall under any of the things for the executive session, because that's what I have. He says, we're free to openly speak about this.
I've been holding in this cough and I'm trying to hold it in.
I saw you was on, and then all of a sudden you're back.
We're mysterious ways.
Want a cough drop?
I have them actually, but these are done. I think maybe sometimes they tickle my throat more than I realize.
I was traveling with them.
I saw that, yeah.
So it has to be publicly?
Just soothing to the throat or helpful?
Where's my throat?
Here's your throat.
Can you speak from the cough?
Yeah, I had like the last couple of days I've had this little tickle and I'm like, it just won't go away. You feel fine when you're like doing allergy. It might be allergy to. Of course, the audit committee presentation.
It was just
and then again today. parking lot, yeah.
So you get.
We need like a formal motion to.
Yes, absolutely, that's.
Don't agree.
Thank you, that's next on my list.
I don't know. You wanna ask a question?
Why not?
Because you're the chair, I'll ask.
Let's stop.
Small break.
Okay. Hi. So, quick question. What is the cost for this program?
The plan was built based on the budget allocation of our contract. So everything that's within those years is within the budget allocation that's already in place.
And that was with the authority?
Correct.
Okay. You need further clarification on that?
I thought you were going to get the amount of cost.
She said,
You need $1.
can we know the dollars?
Yeah, I don't have our contract states the dollars, we can get back to you with what the contract
Please.
states. Yeah, so we built it based on those dollars, yeah.
So get us that amount if you can,
Mhm.
please. Anything else, gentlemen?
This is going to be the first audit committee I've ever sat on where the audit committee didn't authorize a contract like this without knowing the dollars. And if we didn't have authority to do it, we still should ask the question.
Yeah, the contract was approved by the board previously. And we can get you the answers to your questions after that.
He's not saying the board may have, he's talking about the audit committee.
Noted.
I think we would just have to look back at the notes for the committee, because I
Yeah.
do believe we've discussed RSM and their work
Yes.
in this committee before. I know
Yes.
Vilma isn't here present, but she can certainly follow up to provide the respective minutes where this was presented and all the
Absolutely,
details.
we'll do.
And of course, the contract information too.
And when we,
Of course,
and when we get that, can it be distributed to all three of us?
Absolutely.
of course.
Okay?
Done.
Thank you all.
Okay.
Thank you again, Clara and Liz.
Thank you, everybody.
Thank you.
Just one additional note that, as a technical note, the Audit and Finance Committee does not actually approve contracts. So that's another response to that question.
However,
Yes.
However, in the past, we reviewed the internal audit plan for the next year, and we reviewed whether or not certain items and so on made sense. We have not had an opportunity to do that with this document. That's what I believe Mr. Kaplan's talking about. And so, the question is when will we have a full review of each of these items that are being discussed, that are being proposed in this plan? Because
Thank
we
you.
don't know the substantive scope of any one of these projects
Thank you.
or what's involved in it. So that's what I would like to have,
Thank you.
better knowledge of what do these mean?
Noted, thank you. So RSM was previously selected with consultation of the committee. And that discussion is what we're doing now and why it is being presented here at this committee meeting for recommendation of approval to the board. So with that being said, do we have a motion to recommend approval to the board of the 2025 to 2027 internal audit plan?
That'll be
Please.
with the option of getting the information. Once we get the information, we'll say yes, but we need that information.
The
information that we asked about.
the cost related?
Right. So we're gonna say yes, but we do need the information to follow up, just in case.
Noted. Do we have a second?
I assume what we're saying is that our motion we will vote on it on the assumption that we'll have the data that you just asked for.
Correct.
Why, since the only thing we're asked for is the dollars, right?
Right.
No, but I've asked
Yes, well, Richard's
I've
asked for
asked for
more.
the project plan. Each one of the items that are listed in here, for example, 2025, there's gonna be a contract compliance capital program review. You know, so what is the scope of that in terms of specific contracts that you're gonna be looking at, for example? You know?
And if I could,
Are they large ones, are they small ones? Are they ones that are 10 years, are they ones that are 1 year? I mean, you know, what are we talking about here in terms of contract compliance?
great question. Starting on page 13, we go into the objectives for every one of the projects that are proposed. So your question, which contracts, then we go into, once the plan is approved and we're executing contract compliance per se, then we'll go into the process of planning and scoping to determine which contracts should be looked at, from which department, different risk categories, et cetera. But starting on page 13 of the document, we do go into the objectives for each one of the audit areas.
I understand that, but from our committee's point of view, what information are we gonna be receiving to track, you know, what's happening here? Are you providing quarterly reports to us, or an annual report on it, or what is the interaction that we are having with you in terms of these 2025 3 items that are mentioned here? That's all, and what level of detail are we gonna have as a committee to see what's involved here?
We will be providing reports back to you on each one of these audit areas.
Okay.
The report is going to have an executive summary, it's gonna have a background, it's gonna have our objectives and approach of what we did, and it's gonna have our observations. The observations are gonna include the observation itself of what we identified, the recommendations. It's gonna include management action plan, because those will eventually go into a follow-up queue, making sure that we're following up on any remediation that management is making. So each topic area that is proposed, we will be presenting a report to you all on what the results were of the internal audit that we executed.
Okay, so it says 2025. We're now in June. Does that mean that between now and December, we're gonna have reports on each one of these 3 areas?
That's our goal.
Okay, the contract compliance, the facility maintenance, work orders, and the overtime analysis and testing. So each one of those 3 areas are gonna be a report
Back to
between
you.
now and December.
Correct, back to you all.
And you're gonna then send it to our committee
Correct.
for review. What do we have to do with that as a committee?
Well, as a committee, I'm assuming that we have to read it and see if we have any questions based on what they give us. Right now, it's an open plan, and very aggressive because it's June, and they're gonna complete it before
Right.
December. That's a lot of work, so
Right.
when
Well,
they-
presumably they've started already.
Yeah,
So-
but, so, once we get it, then we have to assess, where we need
So
help.
is it our responsibility to approve these items? These audits or not?
You have to
Or
approve
you're
the
just simply
plan.
reviewing them?
The latter, this is a review and first of all, the plan again went through extensive leadership interviews, personnel surveys.
I understand what they've gone through.
Basically, what he's saying is that we will go over it and determine, because the board already approved this.
No, I understand that, but
So
I'm just,
now we have to determine, pick it apart,
so the process is that we're gonna get the reports.
yes, and then
And then we have to review them. Do we have to approve them?
well, I would believe we would have to approve them, or anything that we don't agree with, or we have a misunderstanding, to kind of straighten it out right then and there, so that it is conducive to what we're looking for.
Well, it seems. This is it. The question is, if this has been already approved by the board, is that right?
The dollar amount.
The dollar amount, am I right?
Correct.
So so our role here, we have no role. Other than, if we wanna say something we are unhappy with, because the authority to enter into this contract is the board has exercised its right and it's done it. So,
Yes,
so why, there's no motion here for any activity on our part.
so a couple comments. One, the plan is consistent with what has been presented to the committee and committee members in the past. Also, the plan's consistent with auditing principles. This is also not the first time, this is not in any way out of order, out of line from how we normally review and present such items to you and for recommendation to the board. So
That's what I was-
the report is the, finding itself.
That's what I was getting at, though. How do we approve this? We don't know what the subject matter is.
I was gonna just mention, this is very similar to like an external audit plan. I mean, I'm trying to think of it that way. Deloitte each year brings to you our audit plan for the year, the areas we're going to test, our significant risk, how we plan to address them. And then you approve that plan, right? Or you provide input or direction. And then we bring the results of the audit to you for review, consideration. And I would think your real prime responsibility here is monitoring, right? Making certain that findings are followed up on and addressed timely by management of the
Well,
organization.
Let me understand this. They're asking us to approve this document. This document includes these items of 2025, 26, 27. These are specific project areas. How could we approve that if we don't know what's in there? That's not the question I'm raising.
So
Is how do we approve the report if we don't know what's involved here?
Yes, understood, but per the
That's
committee.
the question.
Per the committee charter, the committee's role is to review and recommend for approval to the board the audit plan.
That's correct.
And being consulted
That's correct.
before presentation to the board for their.
That's
approval.
correct.
So that's just responding to your question of what is the committee's role.
So, how do we do that if we don't know what's the content of the plan?
That's being presented
That's
today.
a good question.
So,
Because I think you have to look at the fact that when we pick an auditor, that's a process that we all have been doing for years, each one of us. So it's easy to do, we look her in the eye and say we like you, and we do it. But
This is very similar, so the RSM team has gone through a risk assessment process and has concluded that these areas, in their professional judgment, based on all of the information they've gathered, are where they should focus their time initially, right? Where they should spend time in, looking at these areas. Again, not saying there's anything wrong, but just to make certain the process is still effective and doesn't need to be improved. And if there are findings that come from these audits, they'll be shared with you, of course. And then really your job will be to make certain that management addresses those, and timely. I mean, I've been around NYCHA a long time now, and I've been here when you had a very sophisticated and deep internal audit bench, and there would be some findings that have been outstanding for quite a few years, actually. And I recall having the audit committee members question that, like, why are these findings still outstanding? And that's exactly your role, right? Is to understand the risk, understand the findings, and then make certain management's taking action. So this is really just a plan. And it could change, right? Tomorrow something could hit the newspaper, right? And you gotta refocus your time and resources to address something real time. And generally that's built into plans like this, such as contingency hours and things like that, in case something comes up that you weren't expecting. And then to know exactly which contract may be selected for testing, I think it's similar to what you're experiencing with us. I say I'm going to test expenses. You don't know exactly which expense I'm going to select. It's a sampling process, but I'm going to respond back to you with the results of that testing or any material findings. In the same way here, they're going to make these contracts. Statistically, professional judgment will be involved, and if there are any findings that come out, it'll be part of the report.
Thank you, Jim.
So, if I So we're starting off with 25, because it's the first time. We're starting off with 25, but then moving forward, we'll be getting reports on how we move forward into 26, 27.
That's correct.
We'll have input then.
Okay,
So initially, this is the input that we're getting now.
right.
And then from there,
So we're approving this as potential individual audit grants.
Correct.
Exactly.
or Proposed
correct.
internal audits. And therefore, we're also approving the notion of having the process that RSM has gone through here to finalize these things.
That's correct.
So that's what we're approving, I guess, is just the notion of a plan
Correct.
that is being
Correct.
proposed, but it's not locked in concrete.
Correct.
That's correct, and recommendation.
And
All right,
then-
okay, well, if that's the case,
Yes.
then I feel a little
Yeah.
And
more at
then-
ease here, because, like any one of these topics could be something that we are not necessarily in love
Comfortable
with, or feel that it's important to do.
Well, it's also,
So,
maybe a
okay,
question of
so
priority.
in that regard, I would second the motion to
Well,
approve this.
just to clear it up, just moving forward, being that they're gonna complete this before 25, or by 25, so 26, 27, and whatever other time, we'll be looking at what they're gonna do beforehand, and we'll be getting reports from them based on the work that they find. If we decide maybe there should be another priority included in there, we can certainly suggest it and bring it up in our meetings.
Okay.
That is absolutely correct, and you'll hear us continue to refer this as the proposed internal audit plan. You'll never hear us say that it's a final internal audit plan, because it should change. Things change, environment change, current events change. So especially for 25, I think we're comfortable with these topics and what we should get started on. But going into 26 and 27, we're still gonna continue to keep our finger on the pulse of what is happening within NYCHA and elsewhere to make sure the area of focus is still the right area of focus.
I was also concerned about our workload as a committee. In terms of, this is an additional reason for meetings or what have you, to go over the results of the internal audit plan. So you would have to build into the schedule, it seems to me, for 25 and 26, additional committee meetings to review the internal audit plans and the projects, these items.
Right.
So that's a workload, scope thing for our committee that we need to consider, and we need to review what the proposal is for our.
Mr. Koo, this has always been part of the workload of the audit committee, just dropped off about 2 years ago because.
Well, it hasn't been for the last 2 years.
Right.
It is now an additional item that will be put into place, which will increase our workload.
But we always schedule 4 audit committee meetings a year, and we cover the internal audit plan and the presentation of the results within those 4 meetings. So we should have opportunity to do that. If you recall, a lot of the meetings in the last couple of years have been much shorter than 2-hour timeframe allotted.
It seemed longer, but.
Well, this one is.
Okay, so in other words, like today, we're doing both the financials and the internal audit review.
Correct.
Plan review, okay.
Yeah, that point is noted and will be determined and explored as necessary. There are no additional meetings planned for right now, correct?
And maybe a suggestion, I think this timing may move up in next year's, right? Because you're in the middle of 2025, so because of just being onboarded and getting, used to the system here in the organization, but this planning meeting should probably be moved up to an earlier meeting versus here at the middle of the year, right? So just thinking about workload for this meeting itself.
But I'm sure that if, in between meetings, if we, as a committee, have any questions, we can surely contact them, right?
Absolutely. Absolutely.
Gentlemen? I suspect that the idea of contacting them in between meetings is not gonna sit well with our lawyer.
I believe you're allowed to contact the external auditor, Deloitte, as well as the internal auditors at any point as members of the committee. I think we get into open meetings, situations when it's all of you at once, but if you had individual items that you wanted to bring forth or to contact them, you are certainly able to do that within your role.
Let me clear that up, just to be sure, so that we do not violate the open law. But that would be an individual call.
Correct.
Correct.
You know, if whatever member has an issue or a concern, they can certainly contact them individually.
Correct.
Because we cannot do it as a group, because then we violate the sunshine law, the open meetings law.
That's right.
I think they were called the sunshine laws at one time.
Florida calls them sunshine laws.
I'm sorry?
Florida calls them sunshine laws.
Oh, okay.
You know, I come back to something I've said here many times before. The New York City Audit Committee has set up a process which has been blessed by the Corp Counsel's Office and Independent Counsel, that when we declare an executive session, we shut the microphone off and we have a conversation the way I do in what I'm accustomed to, and we sit with the auditors alone in an executive session. And someday I can try to convince somebody here that if the city audit committee can do it, there's no reason why this audit committee can't do it. But that certainly would make life easier.
Thank you, Mr. Kaplan. Okay, so thank you everyone for your comments, thank you for all the presentations. Just to clarify, so a motion is in order to recommend approval to the board of the 2025 to 2027 proposed internal audit plan.
So moved.
Second.
All in favor?
Aye.
Thank you. Thank you all. Just before we adjourn.
Excuse me.
Yes.
Excuse me, before you move
Of course.
forward. Were you done or no?
Yeah, we're
Oh, okay. There was a couple of pages and I was wondering if you were gonna go over that. All right.
Yep. Okay, thank you all. Again, you'll have the documentation you requested previously forwarded, we're gonna resend to the committee members. And at this time, that does conclude our business for today, so there being no other matters to be addressed. Mr. Chairman, I want to thank everyone for their attendance at this meeting. And a motion is in order for adjournment.
Oh, you want a motion for that?
So moved.
Please. Thank you, all in favor?
Aye.
That was a quickie.
Thank you all very much for your time today. For planning purposes, our next Audit and Finance Committee meeting is scheduled for
And what is
Friday.
the official end time?
Thank you, I was just about to mention that as well, thank you. So our official end time is currently 12:14, and I was just gonna add before we adjourn that for planning purposes, our next Audit and Finance Committee meeting is scheduled for Friday, September 5th, 2025 at 10 a.m. We look forward to seeing you again then, and for the record, the time is 12:14 p.m. And today's Audit and Finance Committee meeting is hereby adjourned.
September.
Thank you all.
We didn't get it December.
September.